I'm Jeff Pospisil, the 10-Minute Treasurer with practical advice for improving your church's financial future. In this video, I'll go over how churches can see if they qualify, and then if they do, how they can apply for the employee retention credit. So the employee retention credit, which I'll try to call the ERC, some more initials for you, came out at about the same time as the PPP loan, probably included in the CARES Act, but I don't really remember because it was one of those forgotten ones. You couldn't double dip. You could only take PPP or ERC, and PPP was more generous and easier to get, and so a lot of us just went for the PPP loans. But as the pandemic has worn on, the government has kept on expanding some of these programs, and so now ERC, it looks like it could be a good benefit for churches and nonprofits. So the big question is, how much are we talking about? Is this even worth giving your time and attention to even watching the rest of this video if it's not a significant amount? Well, it is a significant amount. So we're talking about $7,000 per employee. But there's a caveat there. It's $7,000 per lay employee. So clergy employees do not count towards this, and they can't claim this as part of their self-employment or anything like that. So this is lay employees. So if you have lay employees, think about what you pay them per quarter and then multiply that by 70%. And that's the dollar amount you're looking at, okay? So, like any good government program, there are restrictions on who qualifies. And here's the main ones that church should be aware of. First of all, it doesn't cover clergy. So if all you have is a pastor for an employee, you're not going to qualify. You need to be paying some kind of lay wages. So somebody that's subject to Social Security and Medicare. The second one is you can't double dip on PPP loans. So this is important, especially if you took the second draw of your PPP loan. So, but you could still claim the ERC. You just have to make sure the time periods covered by each don't overlap. An example would be is if you took out a PPP loan and received it in March, you could still claim for ERC those months before March, so January and February. So you could still claim both, but you just can't overlap them. And you also can't double dip for FFCRA. So that's that tax credit, the Family First Coronavirus Response Act tax credit for if somebody gets sick because of coronavirus or the vaccine. And anyway, that time off to help cover that. I think the worksheet helps guide you through that, but just know that you're not going to be able to, um, anything you claim for ERC will also be canceled out by FFCRA. So. The fourth one is there's a max of $10,000 in qualified wages per employee per quarter. So if you pay somebody $15,000 for the quarter, they're going to be capped at that $10,000. And the next one is actually a double one. It has to be either one of these. So it has to be either one of these. And these are the tougher ones. Maybe I should have led with this, but you either have to have a 20% decline in gross receipts comparing quarter to quarter. So that means your 2021 Q1 versus 2021 Q1. Did you see a 20% decrease in your gross receipts? So that's the one you're most likely going to meet, at least in the Dakotas, where we didn't have a whole lot of government shutdowns, because the second one is the government ordered suspension of operations. And this could either be a full or a partial suspension of operations. So if you weren't allowed to meet because of government restrictions, that would also qualify you. This is different than if you just took precautions for the safety of your congregants and decided to partially suspend operations. Maybe you only had online worship. You know, that's you doing it, but it has to be the government doing it to you. So to show you how much you qualify for as well as how you would apply, I'm going to go through an example, and it's going to be very loosely based off of Sunnycrest. So the numbers are made up. So in Sioux Falls, there was no government shutdown for 2021. So you'd have to qualify under the gross receipts test. And so let's just say that Sunnycrest, or this the example church, had $128,000 in Q1 of 2020. So to figure out if you qualify, multiply that by 80%, And then you see the total is 102,400. So if Q1 of 2021 is less than 102,400, you would qualify under the gross receipts test. If not, you'll have to wait until Q2. And this case, I'm just making up numbers, so I made up a number that was less, so 97,500. So now let's start looking at what the amount this church should expect to receive under the ERC. So let's say they have 4 paid positions. They have a senior pastor who has a salary of 44,000 plus health insurance through the denomination. They have an office manager, $30,000 salary, plus the QSERA is a reimbursement arrangement that's before tax, so that's $4,000. They have a youth pastor receiving $10,000 who's not clergy, and they also have a custodian who has $8,000 in wages. Let's go ahead and plug all these amounts into a spreadsheet. And so you see the annual amounts, then the qualified wages. Those are the wages that qualify for the quarter for ERC. And then there's also qualified health plan expenses. So if qualified health plan expenses can help bring you up to that $10,000, so if they are allowed. So for the senior pastor, no surprise here. None of the wages count, none of the health expenses count for the senior pastor. No surprise that they just don't qualify for ERC. For the office manager, a quarter of the wages would be 7,500. But what about the health insurance benefit? Actually, none of that qualifies. So QSERA, which is that reimbursement arrangement, that is not a qualified health expense for ERC. It really has to be part of a group health plan. So, and not a lot of churches have a group health plan. There's a couple of them that get insurance through the conference that I would suspect the cost of that actually does apply, and it would go for the total premium then that's paid for the employee. And then there's the last two. We have the youth pastor and the custodian. I just take a quarter of that and then I add it up and I get $12,000. So with the ERC, you could potentially get up to 70% of that qualified wages. So that's a significant amount for a church in most cases. So now to claim this credit, you have to go through the 941. And so here's just the first page, and this would be for the first quarter of 2021. So this first part is same as usual. For employees, we had $23,000 in federal income tax, wages, and tips, some income tax withheld. Calculate the Social Security and Medicare same as normal, and you get 1836 for both sides of the Social Security and Medicare taxes. And total taxes ends up being 4,500, and total taxes after adjustments 44,500. And then that brings you to this one, the non-refundable portion of the employee retention credit for worksheet 1. And we'll have to come back here because you have to go to worksheet 1, which is in the instructions to the 941. And I'll leave a link to that as well in the comments. So I'm going to go ahead and walk you through this worksheet. So we start off just following the instructions. It says use part 1, line 5A, column 2. This is Social Security tax, both sides, and that was $1,488. We didn't have any tips, so I'm just going to subtotal this then, $1,488. You multiply it by 50% to get the employer share, so that's $744. If you don't understand what this means, it probably doesn't apply to you. So I'm leaving that blank, 744. And the same thing for this notice and demand. If you don't know what it means, it probably doesn't apply. So 744, that gets you your employer share of the Social Security tax. By the way, hopefully that's not my general rule of thumb. If you don't know what it means, it doesn't apply. Because sometimes it does apply, but for a lot of these ones, if you didn't fill out those specific forms, it probably doesn't matter. So I put in zeros for these other ones as well. So no other credits used. So our total is 744, and that's an important number. We're going to need that below, so 744. The next section here is the for the FFCRA credit. So that's a good one to, again, you can apply for both at the same time, but you just have to make sure that you're not double dipping. And so then we get to the step 3 is the employer retention credit. So we grab our qualified wages and we'll plug that in. Yeah, that's $12,000. So, and basically the same as your Social Security wages. And then if you did have any health plan expenses, you would include that, and we didn't, so that's 0. So 12,000 is our total there. And so our retention credit, we would multiply that by 70%, and we get 8,400. Then we have to use that 744 from up here and plug that in down here. So 744. And then we don't have any FFCRA credits, so that's a 0. And then we just have to subtract, and we get 844. So that's what prevents you from doing any double dipping. And so our non-refundable piece is 844. Our refundable piece of the credit comes in here, and that's just subtracting numbers, and we get 7,656. So, all right. So then we're back to our 941, and we plug in that 744 for the non-refundable portion of the credit. All right, so we flip to the next page, and the first one is just a total, so that ends up being 744. And then line 12, this is subtracting the 744, that non-refundable credit, from our total taxes. And so that gets us to 3,756. Our total taxes was 4,500, which is also the amount you likely paid in for your remittance of payroll taxes. So that's what I'm putting for our total deposits is 4,500. So then we go down a little bit further and we get to the refundable portion of your ERC, which is what we got calculated on the worksheet. So 7,656 was the refundable piece, and we just add those together. So we take the deposits of 4,500 plus the 7,656, and that gives us 12,156. 13F, if you don't, if you haven't been trying to claim this in advance, you could ignore that. So that just leaves us our total deposits and refundable credits is 12,156. And so we don't have a balance due, but we have an overpayment because we have that 12,156, and then we subtract that line 12, which is your total taxes less the non-refundable piece, and that gets you to 8,400. And that's what and I checked to send us a refund. I mean, you could apply it to the next return, but I said send us a refund check. And so we'll be getting a check in the mail for 8,400. One last piece to be aware of is that you do have to plug in the amounts in part 3 for the qualified wages for the employee retention credit. So that was that $12,000. And then also if you had qualified health plan expenses, you would also include those in line 22. So I'm sorry for being slow on this. I realize most of you have probably already filed your first quarter 941 by the time this was published, but this was not at all on my radar. The ERC was not at all on my radar until just a couple of weeks ago. And then I started diving into it and seeing what a good benefit it could be. So you can do an amended 941 for Q1 of 2021. Also, it might be worth checking in if it applies for any of the periods not covered by the PPP loan for 2020. You can do amended 941 for those ones as well. And otherwise, you're prepared for Q2 941. So again, I'm sorry for being slow, but I guess better late than never, maybe. So I hope this has helped you. I will put links to some of my source materials as well as other resources in the comments. And you know, you can always find more of our stuff online at www.dakotasumc.org. And we're here to hopefully bless your ministry. Again, if this was helpful, like, subscribe, and share. Comment too. I like hearing from people as well. So All right. God bless you.